Well, the stock market had some pretty dismal performance through the first part of August, but last week we saw the markets rally quite nicely. So, does that mean that the correction, the stock market crash, is over? Well, I'll give you some things to look for. There's two important charts to watch, and I'll show you those. Then I'll do my analysis of the overall markets, including the commodity and currency markets. And then finally, we'll look at the trade of the week on ICCT. So, is the stock market crash over? Did we even really have a crash? Certainly it felt like one through the first part of August because all the markets did was go lower. But last week, on the heels of a speech by Jerome Powell, the Fed chair at Jackson Hole, we saw the markets rally quite nicely. And that is a testament to the fact that investors think that maybe the economy is not going ahead as quickly as it was, that investors are starting to price in less of an interest rate raise. And so we're going to look at two important charts this week. They are the stock market chart itself and also the bond market chart. We want to see what the market's opinion is for the future of interest rates and ultimately the future direction of the stock market. So the first chart I want to look at is the S&P 500 chart. This is the daily chart. And what you can see here is that although we had some pretty good weakness through the first 3 weeks of August, in the context of the last 6 or 8 months, the market is still in an upward trend. Anytime the market is in an upward trend, there are cycles of strength followed by pullbacks. Strength, pullback, strength, pullback. And all that you could call this recent move down is just a pullback to the upward trend line. And you can see that that short-term pullback was broken last week and we started to rally again. Now markets typically top out by making a falling top and then breaking the upward trend line. So if we think about this chart again, we have an upward trend line and we'll just eyeball it more or less like it would be. If the market is in fact going to go into a stock market crash, then we would expect a falling top to form and then a break of this upward trend line. So that's what I want you to watch for. If you start to break that upward trend line in the next little while, then there is some concern that we're going to get more weakness. Now the other thing to keep in mind is that September is historically the weakest month of the year for the stock market. And so if we do in fact roll over and break that upward trend line, then I think you need to be concerned about a crash, about more weakness. Now that hasn't happened yet. We're still in the upward trend. And so as long as we can stay in this upward trend, we shouldn't be too concerned. But there is one other chart to watch, and that is the chart of the bond market. Now this is the 3-year weekly chart of the bond market, and you can see that in general, the bond market has been going down. And that is basically meaning that interest rates have been rising. Now in the last this year, for the most part, interest rates were stable, and then they started to rise again in the last 6 or 8 weeks. Now, the past 2 weeks, we've seen a little bit of stability, and that's expected because interest rates rose to their historical highs, meaning the bond market fell to its historical lows. Now, I'm still concerned about this bond market chart because it is going down from left to right. The sellers are still in control of the bond market, which means interest rates are still rising. Now, they haven't risen a lot the past year. We've had a little bit of a rise the past 2 months, and then in the past 2 weeks, we've started to see some stability. If this chart breaks down through this floor price, again, this is TLT, which is the bond market chart that I like to use, representing US Treasuries. If this falls down through that floor, the market is pricing in more interest rate raises. Hasn't happened yet. Just like the stock market hasn't broken down from a falling top. I'm giving you the things to watch for, to be concerned about. And of course, I'll keep updating on these charts every week. Make sure you're subscribed to the channel. Click on the subscribe button. Click on the notifications bell. It's free. I do it every week, and I'll keep you updated on this. All right, let's move along now to the overall market analysis. We'll jump into the shorter term chart of the S&P 500. I'm at Stockscores.com now, and here you can see the downward trend line was broken from a rising bottom. Okay, that's what we've seen this week. So that's a positive for the stock market. Now on Friday, we opened strong and closed weak. So if we start to see a move down through 450 on the SPY next week, then we're going to start a little bit of a pullback. It wouldn't be unhealthy. It wouldn't mean the stock market is crashing. Again, what we want to look for is, does the market break this long-term upward trend line from a falling top? And so if we were to make a falling top here and then move down through, say, 435, something like that on the SPY, then you can be concerned. But look at the stock scores. They're still strong. The sentiment stock score is 63. We want it to be above 60. You can see that for most of, well, almost all of 2023, the S&P has been above that 60 level, and the market has been generally rising. When the market was falling through 2022, we were mostly below the 60 level, aside from this little rally period when we got back above 60. So that's another indicator to keep an eye on. All right, now let's jump over to the NASDAQ 100, QQQ. And here again, the short-term chart, very much like the S&P chart, built a rising bottom, broke the upward trend, and weak performance on Friday. Looking at the 3-year weekly chart, same kind of situation. The NASDAQ has outperformed the S&P, and it's largely because large cap tech stocks have lots of cash, they don't have a lot of debt, so they're not as susceptible to a rise in interest rates. And so that market, those large cap tech stocks, have done really well. And they just have a heavier weighting in the NASDAQ 100. They're still in the S&P 500 as well, but they have a heavier weighting in the NASDAQ 100. Let's take a look at the small cap market. These are stocks that are much more sensitive to rising interest rates. Now, the IWM broke the downward trend line and has been moving nicely ever since. So it's in a short-term upward trend. That's a positive. But let's take a look at that longer-term chart. Unlike those large cap tech stocks or large cap stocks in general, this market has not been trending higher. It's been stuck in a sideways range similar to what the bond market has been doing through 2023 and the end of 2022. Just been going sideways, building a base. Until we can get a breakout from this trading range, the small cap stocks are not keeping up with the large cap. But that could change if we can get a breakout through that level. All right, let's move along to the TSX. T.XIU is the chart there. And there you can see a nice comeback rally, led in large part by strength in oil. We'll look at the oil chart in just a minute. And if we look at the 3-year chart, again, stuck in that sideways range. So the small cap US stocks and the TSX, the Canadian market, very similar charts. They're not keeping up with those large cap tech stocks that heavily dominate the NASDAQ 100 and the S&P 500. All right, let's take a look at commodity now. And we're going to start with oil because this was the big mover this week. You can see the downward trend line broken and we're moving higher. Now, one of the reasons for that is we started to see some stability in the very weak Chinese market. And that's an indication that maybe China's improving, which will mean more demand for oil, and perhaps that's what's motivated the rise in oil prices that we saw there. Plus, of course, you have hurricanes, and that always threatens production in the Gulf of Mexico. Looking at the 3-year chart, it's an important move this week because the market here for oil on the 3-year weekly is breaking up from a rising bottom, and that should lead to further price increases for oil. And again, this is supportive for the stock market because if oil's improving, that means perhaps the economy is improving and the sense that, or the global economy is improving, and that could be helpful for stocks in general. All right, what about gold? Well, gold actually had a pretty good week as well. And you'll see why in just a moment. The 3-year weekly chart of gold is still not great, still stuck inside of a range with falling tops having broken the upward trend line. So short-term strength in gold encouraging, but look at the sentiment stock score there, 40. I still think we got to be careful with gold. All right, the last chart I want to look at, well, not the last chart, but the second to last chart, and this is the US dollar. It has been moving higher, but with quite a bit of volatility. And that volatility comes around what is going to happen with interest rates in the US. So there's a lot of uncertainty there, and you can see the US dollar bouncing around. The 3-year chart is a bullish one. The US dollar looks like it has broken out and is likely to go higher. And it's interesting because normally If the US dollar is going up, gold and oil will go down because they're priced in US dollars. And so it's an interesting phenomenon that we're getting this uncharacteristic correlation between the US dollar and gold and oil. All right, last chart I want to look at is Bitcoin, GBTC. And Bitcoin, lots of volatility. You see this big jump here, and then it gave it all back. Looking at the 3-year weekly chart, it's still in an upward trend, but that failed attempt at strength is a bit worrisome. It is in an upward sloping channel. It's not a hot market by any means. It's sort of drifting higher. If it breaks down through that, be pessimistic. Otherwise, it can slowly make its way higher. So my ratings then on these markets, if we just jump into here, bullish on US large cap and NASDAQ stocks on both time frames. But you can see the little divergence there. US small cap stocks and Canadian stocks, bullish in the short term. They had good rallies this past week, but still neutral long term. They are underperforming the large cap stocks. Gold, short term bullish. We had a nice little rally, but still long term bearish. So don't be getting sucked into strength in gold because it has work to do before it gets better. Oil, hey, bullish on both time frames. It's in a nice upward trend in both the short and long term. And then our US dollar, Bitcoin, and interest rates, all neutral in the short term and bullish in the long term. I forgot to show you the chart for interest rates, so let's just quickly do that. Here is TBT, and so if this is going down, interest rates are going up. We saw the little bounce back on the jobs number on Friday. The 3-year weekly chart is moving up in the long term, but in the short term, my sense is we're more or less just sideways here on TBT. And so that's why I put that neutral rating in there. All right, now let's move along to the trade of the week. And this is on ICCT, which was a very hot stock this week. And even when markets are weak, even when you're seeing pullbacks and lots of volatility in the market, you can make money trading stocks that catch the interest of the crowd. And that's what ICCT did this past week. It started with abnormal activity right there on the 28th. And so that's our cue to keep this stock on the watch list because there's something going on. The price action was abnormal, the volume was picking up. And then what I like to do is watch for breaks of pullbacks for swing trades. And so there's one right there. I call this my alpha echo strategy. Alpha is the abnormal trading action, and then this is the echo. So you have the alpha action, it calms down, and then you have the abnormal behavior coming back, and that led to a really nice run over the next 2.5 days. Now, on this particular day, the stock was halted. That's why it cuts off early there. And then it just kept right on going. And then you sell when your upward trend line gets broken. So you've got what we call a bursting bubble candle right there. You've got a break of this very steep upward trend line right here. And that keeps you out of the stock when it starts to pull back. All of these concepts, all of these indicators that you see on my screen, pink dots, yellow dots, that's all part of our active trading course at Stockscores.com. And we have a service called Active Live where we get these real-time signals on stocks like this. And you can learn more about that at Stockscores.com. Go ahead and check that out. It's in the trader training area of the website. Well, hope that you've enjoyed this week's video. Please click on the subscribe button, notifications turned on. If you like the video, let me know by clicking on the like button as well. Most importantly, trade well.